Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Tuesday, September 22nd, 2009. We begin today's broadcast with a look at the New Zealand dollar-US dollar pair, which rose strongly in favor of the Kiwi, breaking a three-session downturn in the pair. From its open, the Kiwi climbed as much as 180 pips, testing the area around 0.7240, the highest it's been since August of 2008. The New Zealand dollar was supported by news that the Asian Development Bank said the region's economies will expand this year faster than initially forecast, and a second release that showed the New Zealand current account deficit shrinking. The New Zealand dollar-Japanese yen pair broke above a resistance level at the 65.10 area, moving about 110 pips higher, which set a new 11-month high for the pair. The report from the Asian Development Bank helped boost risk appetite as the prospect for the global economy improved. Higher risk appetite pressured the US dollar in today's trading. The dollar-yen pair gave up its gains from yesterday, falling back below an important level at 91.60. That broke a short-term, upward-sloping line of support. The price action also adhered to the newer dynamic that shows the greenback slumping against the yen when risk appetite is higher, as the greenback is becoming the premier funding currency for carry trade. We can see this phenomenon in the dollar-Swiss franc pair as well, which extended its decline, falling below last week's support level at 1.0275. That extends the pair's decline to 300 pips since it broke out of a sideways consolidation pattern at the beginning of this month. The dollar was pressured against the euro today as well, ending 3 sessions of gains for the dollar, as higher stocks in Europe added to the sense of risk appetite from the Asian session. The euro-dollar pair rose above resistance at 1.4765, moving to a new 12-month high. The pound-dollar pair, which had been sliding the past 6 sessions or so, rallied in today's trading, climbing 180 pips to test the area just below 1.64. That has been an important level recently, as it has been alternating between being used as support and resistance by traders the past 2 months. In fundamental news, U.S. house prices rose a seasonally adjusted 0.3% from June to July, a figure that was lower than expectations, while a 0.5% increase for June was revised down to show a much smaller 0.1% increase. The data shows a slightly weaker picture for housing prices. In a second release from the U.S., the Richmond Fed Manufacturing Index remained at 14, the 5th month in a row that activity has expanded in the Central Atlantic region. All broad indicators, shipments, new orders, and employment were in positive territory, with manufacturers noting the first increase in worker numbers since December of 2007. However, expectations were for a better reading, so the figure could be interpreted as a mixed bag. In Canada, retail sales fell 0.6% in July, a figure that strongly undershot expectations of a 0.5% increase. Statistics Canada reports that most of the decline reflected lower prices at gasoline stations, and that if measured in strictly volume terms, sales edged down only 0.1%. It's only the second month out of 7 this year that sales have been negative, following large drops in retail sales at the end of 2008. The US dollar-Canadian dollar pair exhibited the same reaction to today's risk appetite, with the greenback surrendering its gains from yesterday and snapping its 3-session rally streak. We moved below a short-term trend line, and despite a weak attempt at a counter-rally by the greenback, it was trading below the 1.07 level in late New York afternoon trading. Following the strong surge by the New Zealand dollar today, keep an eye on how the currency reacts to the release of New Zealand GDP figures for the second quarter, which are expected to show another negative reading, though smaller than the 1% quarterly decline seen in the first quarter. On tap overnight will be flash versions of manufacturing and services PMIs from Germany and the Eurozone, along with Eurozone industrial new orders data. Also overnight, the UK will post a measure of mortgage approvals and the Bank of England meeting minutes. Tomorrow morning, the fundamental docket is empty, but in the afternoon, we will get the conclusion of the FOMC interest rate meeting and their statement, which will be watched very closely by traders. And that wraps up today's coverage of the Forex markets. Thank you for joining us here at CMSFX.com, and happy trading.